Hello and welcome to Keeping It Real. I'm David Grossman. Great to be here live at the kiosk on alltalktv.com. I will remind you again, if you're watching this from your home or your office, well, first of all, thank you very much for watching, but we will also be happy to have you here at the studio sometime. Just let us know if you'd like to come in, so we'll make sure we have room for small audience. It's interactive TV. We'd like to hear from you, and especially if you're here in the studio. We have a microphone and we have cameras, and we'd be delighted to have your opinions. They matter. They do. That's what All Talk TV is all about. And we have a great show for you today. I'll tell you who we've got here. First of all, with me at the table is Keith Waters. Welcome, Keith.
Thank you, David. Thank you for having me here.
It's a pleasure to have you back. We had you on a few weeks ago, and unfortunately, due to some small technical errors, things didn't work out as we'd hoped, but we're delighted to have you back. Thanks for your understanding. We also have with us today Hamid Bashani. He's a barrister, solicitor, notary public, and not only is he a lawyer and does a lot of real estate law, but he's actually started his own show on our network, and it's called Third Opinion, and it's in Urdu. So if you speak Urdu, make sure you watch the show. We're going to talk to him about his show, very interesting, not just about real estate today. And of course we have Jeff Ginsberg. He's publisher of the Email Guide. So we're going to learn all about email marketing, which is a very interesting online marketing topic for today. But Keith Waters is a mortgage agent. He has been a mortgage agent since the
1974, helping Canadians finance their dreams.
So he has he's done a few mortgages, I'm sure.
Yes, I have.
Over those years, and his focus now is on private lending, commercial institutions. He's pretty much any type of property you can imagine. Gas station,
yes, sir.
A nudist colony.
Yes, sir, you remember.
Strip joint.
Yes, sir.
How can I forget? So he's seen it all. So if you have a tough deal that you need to get financed, Keith is a man with a lot of experience, knows where to get the money.
Yes, sir. Yes, sir.
And thanks very much. So now let's just trace back a little bit over your career, because you've been doing mortgages, but you've also been training over those years as well.
I started in the mortgage business in the mid-70s, and we've been financing all across Canada, mostly Ontario, all types of industrial, commercial. And I took a few side tracks doing training. Worked with Raymond Aaron, and we went across Canada teaching how to buy real estate with nothing down back in the 80s. And with Charles Givens, who was the author of Wealth Without Risk.
Okay.
And we worked with him also. But in general, I would say probably right now in this market today, probably 70–80% of what we're doing is private funds.
Right.
I mean, the timing, the reason private is so popular right now, because at the bank they're not getting much money. They're getting, what, 1–1.5% perhaps. So our private lenders are very active getting out there.
What do you mean 1–1.5%?
Well, if you got your money in the bank today, what do you get?
Oh, the rate.
Yeah,
I see.
What are you getting on your money in the bank? You're
Right.
getting 1–1.5%, if that, if you have lots of money.
So from an investor
From a private investor point of view, typically even a year ago, the rates were going out at 7.5%, 8%. They're coming in lower now because they want to get their money out.
Right. So it's not only great for borrowers, but it's a good investment opportunity.
Absolutely. Mortgages have always been a great investment, as long as you don't go 100% financing. But traditionally what we're finding is the marketplace out there is very active, especially in the last 2–3 weeks. Things have seemed to pick up. Maybe it's the year end, but we have a mixture of purchases and refinances, and not all particular lenders will fit into the conventional box.
Right.
So that's why the need for private funding has really been, I think it's blossomed more so in the last 5 years than it has ever since I've been in the business.
How do you loan on a nudist colony?
Well, very carefully. It was ironic because this nudist colony was unbelievable cash flow, unbelievable down payment, like 50% down. It was $1 million purchase. They only wanted $500,000. They had net income of like $250,000. Yet no bank, no trust company would touch it because it's a nudist colony.
Right.
So the clients had to end up getting private money, which we did. And it was ironic when my lender was there inspecting, I called them to see how it was going. And he said, hold on, Keith, I'm putting on my pants. I'll get back to you shortly.
Now, I've heard that banks don't like lending on religious institutions.
Absolutely.
Like, because if they ever had to foreclose, they're afraid of the negative PR.
Absolutely.
Like foreclosing on a church or something like that. But what's the downside of lending on a nudist colony from a bank point of view?
Well, just because of the nature of the beast, just what it was. Again, the banks that trust companies lend on, houses or apartment buildings or plazas or industrial units. When it's unusual like that, they just sort of stay away.
Maybe because, there'd be people who say like, oh, how can you support this kind of thing?
Absolutely.
Like the zealots would say, oh, nudist colony, that's hurts their religious sensibilities.
Well, getting back
promoting all kinds of crazy things. So the banks just.
Well, that's ironic. Even like I just financed this week a church on Finch Avenue, which was a unit, which is an industrial unit, but 4,000 square feet, but used as a church.
Right.
And again, we were only going like 50–60% of value, but no institutions would touch it. We had good applicants with credit, but because of the nature of the beast, so they got to go private.
Yes.
So when they go private, we can go up to maybe 65% or 70% of the value, and the interest rate the client was paying is 7.5 for 3 years.
Not
So,
bad.
I mean, it's still pretty good.
Right.
We're happy with that.
Yeah,
Our lenders are happy.
That's good. So good for the borrowers and
Absolutely.
good for your investors as well.
Absolutely.
Having that kind of security.
Well, I'm finding now, I have a lot of my private investors calling me saying, Keith, if you have a good deal, $1 million, $2 million, and it's a deal you would take to the bank,
yes,
give me a call. I might match the rate.
Right.
So,
yeah, you were telling me that last time. You have lenders that are willing to loan as low as 5%.
Yeah, 5, 5.5, 6.
That's pretty amazing.
It is for private lenders.
Right, because I didn't think you could get anything for less than 8, 9% on a
we're getting
deal.
much less now. We're getting 6, 6.5 on stuff, and we're finding that the typical stuff that the banks don't want to do, or even when the banks give them only X number of dollars, and we'll have to top it up, maybe give them a higher second or something like that. So we have lots of money for stuff like that. Owner user, properties up to 80–85% on second mortgages. Just maybe this morning, I just gave a quote on $1 million second on an industrial building, and the rate was like 8.5%.
Wow.
Because there was a lot of equity.
Right.
It was like the same as being in a first. I think we were under, combined with the first and second, it was under 60% of value.
Right.
So when you get the low loan ratio and a good client, the mentality is, well, it's safe, so we'll go a lower rate.
Right. Well, I thought a few months ago that there was some jitters and private lenders may be scaling back, but it sounds like, 80 or 85% on a residential property.
Yeah, bearing in mind, as long as the client has reasonable credit, and a lot of them, they won't do it if the guy's gone bankrupt or he's in the proposal or something like that. But typically, we're going up to 85%, and those rates are costing the client about 12%.
For a second mortgage.
For a second mortgage.
Well, I guess that's kind of like emergency money.
Yeah, well, not only that, a lot of them, even if you consolidate your credit cards and everything else, if you borrow $100,000 and pay it off, you're only paying interest, you're paying $1,200 a month, versus if you had credit cards at $100,000, you'd be paying $3,000 a month.
Right.
So a lot of it is for the purpose of monthly cash flow. That's what everyone's looking at today.
Right. Well, I guess there's people who are self-employed.
Many.
And the banks are, for self-employed, they're not doing much, especially on a second mortgage. They used to offer these lines of credit at Prime or...
Well, even that has changed now with their new restrictions, and the banks and the trust companies getting a little tougher. But again, what we're finding out there is again, not to be redundant, but there's more private money I've ever seen in the 30-some years I've been in the business.
Right.
It's flush. People want to get it out.
Right. Well, and you know where to find it.
We know where to find it.
You have the contacts.
And we're doing I got a retirement home in a small little town out of town we just did with private funds. Doing a car. I just did a gas station in Milton, private for $2.9 million. So the amount, it doesn't matter. And on gas stations, the rates will vary from 8 to 9%. But again,
not too bad. I thought.
Yeah,
they
well,
would have
especially because the
been
banks, if they do them, they'll only go maybe 50% loan ratio.
Right.
And everything's got to be squeaky clean. Still with a private lender, you go through the same procedure. You do the credit report. You make sure you check everything out. You get the appraisals done. There's no magic to it from that point of view. But private lenders are more flexible. I can call one and go out tomorrow, inspect the property, and have a commitment by the same day.
Right.
Unlike you can do with an institution. So we find that, and the irony of the whole business today, because we've been in the business CYR financing since '74, is that probably, if I look at our books and checking with my agents, we probably get 60% of our business, if not 70, from other mortgage agents.
Oh, wow. Okay, so that says a lot.
Yeah, because a lot of them are just specializing in residential, you know, and if it doesn't fit into the box, you know, they need to find other sources.
True.
So we're finding that that is a phenomenon that in the last 2 years has really gone from 40% up to 70%. And again, you know why, being in the mortgage business, there's a lot more people come on into the industry over the last decade.
Right, right.
I think it's whatever it was, I think 10 years ago we had 850 in the GTA, now we have almost, I think 7,000 or 8,000.
Yeah.
It's a major jump.
Well, and plus it takes years to develop those kinds of
Absolutely.
connections where, you know, you can call up a private lender and say, hey, I need a couple $1 million and we got to close this deal in a week or 2 weeks or whatever it is. To establish that kind of trust. Yeah,
for sure. I mean, because we've been blessed that we have all these. We have over 500 sources of private funds that we draw on. But what I'm finding now, because we've been in business so long, is now the kids are coming in. You know, like I told you earlier, my 2 daughters joined our company, right? Daniela and Alethea joined are in the mortgage business now. And I'm finding even with my older private lenders who are getting on, now their sons and daughters are, so it's the next generation.
Next generation.
So you keep in touch with them.
Right. So talking about mortgage mentoring, so I guess you're training your daughters, are you?
Well, I'd like to take credit for that, but no, I'm not training them. My wife, my ex-wife and partner, and was ex-partner, but Rena, who has is the broker, is their mother, and I still work with her, of course, and she trains them, and thank goodness, because she's one of the sharpest ladies in the business.
Right. And that's nice that you're still working with your ex-wife.
Why not? Just because you can't live with them doesn't mean you can't work with them.
That says a lot.
Well, listen, business is business,
right.
You know, and I think especially that I never did think that my daughters would ever come into the business. It really surprised me a hell of a lot. But I'm very pleased, tickle pink that they're in the business.
It's like their mother and their father.
Yes. Yeah.
Well, and I know that you have a very close relationship with your daughter. You're so proud you came in. Last time you were showing me these amazing videos.
Yeah, they're all talented girls.
Very talented. Some awesome singing and stuff there.
Yeah, they're talented ladies. Just like their mother.
Just you're giving all the credit to your ex. Maybe
it's better that way.
Should we wish her a happy birthday?
Oh yes, by the way, it is Rena's birthday today, and happy birthday, Rena! If you're there, you're watching.
she'll be tickled pink, I'm sure. Yeah.
Good.
Very good. So that's the story. Keith Waters, he's your mortgage agent with CYR Funding, mortgagementors.ca. He's got the connections. He has the know-how to get it done for you. If you've got a situation that is a little bit different and you need to look outside of the bank and you need to move fast, he can make it happen. Keith Waters, we've got...
If I could just say one last thing, when you said done, our slogan is when you want your mortgage done, call 905-731-1111. That's our number, 905-731-1111.
Okay, well, we've put your, if you'll remember that, or we've also put your cell phone, so they can reach you directly there. We'll put that on the screen for people as well. Mortgage Mentors. mortgagementors.ca. Keith Waters. Keith, thanks so much.
Thank you, David. Thank you for
being here. Much appreciated.
My pleasure.
And we will see you, I hope, next month.
Yes, we'll come out and I'll promote my book next month.
I'll look forward to talking. Just tell us the name of the book.
The book is called Selling from the Inside Out. Selling
from the Inside Out. Great name, great concept. Okay. People will enjoy hearing about that, I'm sure. So thanks so much.
Thank you very much, David.
We're going to take a very short break. When we come back, we're going to talk with Hamid Bashani. And Hamid Bashani is a real estate lawyer, but that's not all. He has a show here on our network, All Talk TV, called Third Opinion. It's in Urdu. I don't speak Urdu. I don't know what he's talking about for most of the time, but this is one scholar, and I'll tell you, I'm very pleased to have him as part of the network. We're going to learn a little bit about real estate, law, and we're also going to talk about his show, because I think that is something that we can learn about. He talks a lot about the situation in India and Pakistan, the war that's been going on there since 1947. So we're going to get some insights from Hamid. Hang in there, we'll be right back.